Dear students, Unit 4 of Financial Accounting 6 subject is Alteration of Share Capital and Internal Reconstruction. In this video, you are going to learn problem number 10. Let's look into the problem. Balance sheet of Ernest Company Limited is as follows. You can see equity shares of 10 each, 7% preference shares of 10 each, 5% preference shares of 10 each, 5 rupees paid up. So you have two categories of preference shares. And 5% debentures, 8% debentures, two categories of debentures, sundry creditors and debenture interest due. On the asset side, you have goodwill, buildings, machinery, patents, furniture, investments, debtors, cash, bank and P&L account. Adjustments. First adjustment is equity shares of rupees 10 each were to be reduced to shares of rupees 5 each. So here it's a scheme of reconstruction and shares of 10 each are reduced to shares of rupees 5 each. So number of shares that you have is 20,000 shares of rupees 10 each, 2 lakh rupees. 20,000 shares of 10 each, 2 lakh rupees. So your journal entry will be old equity share capital account debtor to new equity share capital to capital reduction. Old equity share capital account debtor 20,000 into 10 rupees, 2 lakhs. To new equity share capital 20,000 into 5 rupees. So old share of 10 rupees is reduced to new shares of rupees 5 each. So 20,000 shares into 5, 1 lakh rupees will be your new equity share capital and the balance goes to capital reduction account. A reduction in the capital will go to capital reduction account. So here you can see the shareholders claim have reduced from 2 lakhs to 1 lakh. So whatever reduction is there, that amount will go to capital reduction account. Similarly, you will be passing entries for preference shares reduction. 7% preference shares of 10 rupees each fully paid up were reduced to 6% preference shares of 10 rupees each, 6 rupees per share paid up. So in the balance sheet, you have 7% preference shares of 10 rupees each, 1,50,000. Balance sheet nalli 7% preference shares of 10 rupees each, 1,50,000 anta kottidare. Iga ಆ 7% preference shares of 10 rupees each fully paid up na, you are reducing it to 6% preference shares of 10 each, 6 rupees paid up. So your journal entry will be old 7% preference shares of rupees 10 each, that is 7% preference share capital account debtor, 7% preference share capital account debtor, 15,000 into 10, this is given in the balance sheet, to 6% preference share capital. 7% preference share capital is converted to 6% preference share capital. To 6% preference share capital, 15,000 into 6. Okay, so why 6? Because it is 6% preference shares of 10 each, 6 rupees paid up. So paid up value should be multiplied into 6 rupees you have to do. So 15,000 into 6, 90,000. Remaining will go to capital reduction account. 1,50,000 worth shares are reduced to 90,000 rupees. So 60,000 will go to capital reduction account. Being conversion of 7% preference shares of 10 each to 6% preference shares of 10 each, 6 rupees paid up. The face value is same, but paid up value has reduced. Earlier it was fully paid up. Now it has reduced to 6 rupees paid up value, but face value remains the same. Next, third adjustment, you have 5% preference shares of rupees 10 each, 5 rupees paid up were reduced to 4.5% preference shares of 10 each, rupees 3 paid up. So here you can see 5% preference shares of 10 each, 5 rupees paid up, value 65,000. How did you get 65,000? 13,000 shares into 5 rupees. Paid up value, you should always multiply it with paid up value. 5 rupees is paid up value into 13,000 gives you 65,000. So now this is converted to rupees 3 paid up. Okay, so 5% preference shares of 10 each, 5 rupees paid up is reduced to 4.5% preference shares of 10 each, rupees 3 paid up. So your journal entry will be 5% preference share capital account debtor to 4.5% preference share capital account to capital reduction. So how much will be the amount that you will be writing? 13,000 into 5 is given in the balance sheet. 13,000 preference shares of rupees 10 each, 5 rupees paid up. So 13,000 into 5, 65,000. This is the balance sheet amount. So 4.5% to 4.5% preference share capital, 13,000 into 3. Now it is reduced to 10 rupees per share, 3 rupees paid up. So 13,000 into 3 rupees, 39,000 will be the new value and remaining will go to capital reduction account. 65,000 minus 39,000, 26,000 will go to capital reduction account. So conversion of 5% preference shares of 10 each of rupees 5 paid up to 4.5% preference shares of 10 each, rupees 3 paid up. So 5 rupees paid up is reduced to 3 rupees paid up. Number of shares is as it is, 13,000. 10 rupees will be the face value. There is no change in the face value, but the paid up value has come down from 5 rupees to 3 rupees. Okay. So let's move on to the next set of adjustments. Debenture holders agreed to forego interest due to them. So the debenture holders have said that we don't need the interest amount. It is okay, you don't pay us the interest amount, you do the internal reconstruction. So interest is foregone. And after that we have recovered damages of 74,000 which they have decided to use for writing off capital losses. So let's look into that. So debenture interest is foregone. So here in the balance sheet you can see debenture interest due is 19,500. It is foregone. So it's a benefit. Liability is coming down. Debenture interest due is totally foregone. They have told that you don't need to pay as debenture interest. So this amount will be transferred to capital reduction. So debenture interest due account debtor to capital reduction 19,500. So debenture interest foregone by debenture holders. Arrears of preference dividend foregone, there will be no entry, whereas debenture interest foregone you will have an entry because debenture interest is a regular liability. It is a compulsory payment that has to be done and they're foregoing it, whereas arrears of preference dividend is not a compulsory payment. Only if there are profits, sufficient profits, or if the directors have decided to pay, only then the preference dividend will be paid. And that's why if it is foregone, there will be no entry. It's not a regular liability, arrears of preference dividend. Whereas debenture interest is a regular liability. It's a compulsory payment that has to be made to the debenture holders, and that's why if it is foregone, you transfer that amount to capital reduction account. Okay. Next, let's look into damage recovery entries. The company in meantime recovered as damages a sum of rupees 74,000 from third party. So company has received 74,000 rupees from a third party on account of damages. Say for example there was a court case and as a compensation you have received 74,000 rupees. The company has received 74,000 rupees and the company has decided that this will be used to write off capital losses. The company has decided that the 74,000 rupees damage recovery, whatever is there, that will be transferred to capital reduction. You will use it to write off capital losses means you will transfer it to capital reduction and use it to write off accumulated losses and stuffs. Okay, so 74,000 damage recovery entries will be like this. Bank account debtor to damage recovery account. You are receiving the amount. So bank account debtor. Why? Because the amount is coming in, your bank balance is increasing. So bank account debtor 74,000, you are receiving it against damage recovery account. Damage recovery is an income to you now. So to damage recovery you are crediting it. Okay, 74,000, and this amount will be transferred to capital reduction account. Damage recovery account debtor to capital reduction account 74,000. Whatever damage recovery account is created here, so you're closing that account by transferring the balance to capital reduction account because they have told that this amount should be utilized to write off capital losses. So damage recovery transfer to capital reduction account. Okay, so only two entries relating to damage recovery. So when you receive the amount, you write bank account debtor to damage recovery, and whatever amount is received should be transferred to capital reduction. So damage recovery account debtor, here you have credited it, so here you debit it, damage recovery account debtor to capital reduction account. Let's move on to next adjustments. Next you can see reconstruction expenses comes to 7,250. So the reconstruction expenses will be reconstruction expenses account debtor to bank. Amount is going out, expenses should be paid in cash, so amount is going out, your bank balance is reducing, so you'll write to bank. Reconstruction expenses account debtor to bank. Just like you pay rent, you'll write rent account debtor to bank. You pay salary, you'll write salary account debtor to bank. Similarly, when you pay reconstruction expenses account debtor to bank, and you transfer this to capital reduction account at the end. Okay, so then we have this last entry because we are done with all the adjustments. If you can see, equity shares, preference shares, and two varieties of preference shares reduced, debenture interest foregone, damage recovery 2 entries we have passed, reconstruction expenses paid entry we have passed. So all the journal entries are done. So the last journal entry is remaining, that is utilization of capital reduction account balance. So let's have a look. Capital reduction account debtor. So from all the different journals, you will have to take capital reduction account balance. So from the first entry 1 lakh, from second entry 60,000, from third entry 26,000, 19,500 from 4th entry, 74,000 from 5th entry. So like that you have to take amounts from different journal entries. Okay, from all the journal entries: first entry, second entry, third entry, fourth entry, and sixth entry. Fifth entry was bank account debtor to damage recovery. So from sixth entry you get the 74,000. So all the amounts put together you have 2,79,500 rupees in capital reduction account. Now you have to utilize this amount to write off various unwanted assets. So like P&L account balance, goodwill, all those things should be written off. So here you can see in the balance sheet, goodwill 80,000, P&L account 1,75,500. Rest all of the assets are simple regular assets. So only P&L and goodwill completely you will write off. Reconstruction expenses you will write off. Okay. P&L account and goodwill is as it is written. Reconstruction expenses, whatever here you have debited is written off here. Okay. And then still you have balance, so you will transfer it to capital reserve account. Capital reduction account, whatever balance is remaining in capital reduction account after utilization should be capitalized or should be transferred to capital reserve account, which will be shown in the balance sheet under reserves and surplus liability side. So we write off P&L account and goodwill from the asset side. Reconstruction expenses paid. Generally any expense you pay, you transfer it to P&L account at the end of the year. But here you are doing internal reconstruction and you are writing off your accumulated losses. Your P&L account has come here. So again you cannot transfer it to P&L account, and that's why you utilize capital reduction account balance to write off these reconstruction expenses. So P&L account, goodwill, reconstruction expenses, and capital reserve. What is this capital reserve? In spite of using the amounts to write off all these things, still you have balance of 16,750 in your capital reduction account. 2,79,500 minus 1,75,500 minus 7,250 minus 80,000. So you have written off P&L account, reconstruction expenses, and goodwill. In spite of that, you are left out with 16,750, which you will transfer to capital reserve. ಅಂದರೆ ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ನಲ್ಲಿ ಎಷ್ಟು ಹಣ ಸಂಗ್ರಹ ಆಗಿರುತ್ತೋ ಇದನ್ನೆಲ್ಲ ರೈಟ್ ಆಫ್ ಮಾಡೋಕ್ಕೆ, ಅಂದರೆ P&L ಅಕೌಂಟ್, ಗುಡ್ವಿಲ್, ರಿಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಇದನ್ನೆಲ್ಲ ರೈಟ್ ಆಫ್ ಮಾಡೋಕ್ಕೆ ಯುಟಿಲೈಸ್ ಮಾಡಿದ ನಂತರನೂ ನಿಮ್ಮ ಹತ್ರ 16,750 ರೂಪಾಯಿ ಮಿಕ್ಕಿದೆ ಈ ಅಕೌಂಟ್ನಲ್ಲಿ, ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ನಲ್ಲಿ. ಸೊ ಅದನ್ನು ನೀವು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ನಲ್ಲೇ ಇಟ್ಟು ಬಿಡೋದಿಲ್ಲ, ಕ್ಯಾಪಿಟಲ್ ರಿಸರ್ವ್ ಅನ್ನೋ ಒಂದು ಅಕೌಂಟ್ಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಲ್ಲಿ ರಿಸರ್ವ್ಸ್ ಆ್ಯಂಡ್ ಸರ್ಪ್ಲಸ್ ಕೆಳಗಡೆ ತೋರಿಸ್ತೀರ. ಸೊ ದಿಸ್ ಇಸ್ ಕಾಲ್ಡ್ ಕ್ಯಾಪಿಟಲೈಸಿಂಗ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಇನ್ ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್. Whether it is told or not in the question, you have to transfer the balance in capital reduction account to capital reserve. Okay, so we are done with the journal entries. Let's move on to reconstructed balance sheet. Reconstructed balance sheet ಮಾಡುವಾಗ ನೀವು ನೋಡಬಹುದು equity shares of ₹5 each, 10 rupees ಇರೋ ಶೇರ್ ₹5 ಆಯಿತು. ಜರ್ನಲ್ ಎಂಟ್ರೀಸಿಂದ ಬಂದಿದೆ. ಸೊ ನಿಮ್ಮ ಫಸ್ಟ್ ಜರ್ನಲ್ ಎಂಟ್ರಿ ನೋಡಿದ್ರೆ equity share capital 20,000 into 5, 1 lakh rupees you can see. In ಎಲ್ಲೂ equity share capital ಬಂದಿಲ್ಲ ಇನ್ನು ಯಾವ ಜರ್ನಲ್ ಎಂಟ್ರಿನಲ್ಲೂ. ಸೊ equity shares of ₹5 each, 1 lakh as it is ಬರೀತೀವಿ. ನೆಕ್ಸ್ಟ್ ಸೆಕೆಂಡ್ ಜರ್ನಲ್ ಎಂಟ್ರಿಯಿಂದ the 6% preference shares of 10 each, ₹6 paid up ಬರೀತೀವಿ. ಸೆಕೆಂಡ್ ಜರ್ನಲ್ ಎಂಟ್ರಿ 6% preference shares, ₹10 ಶೇರ್ ₹6 paid up ಮಾಡಿದ್ದಾರೆ. ₹10 ಫೇಸ್ ವ್ಯಾಲ್ಯೂ ಇಸ್ ಆಸ್ ಇಟ್ ಇಸ್, ಫುಲ್ಲಿ ಪೇಯ್ಡ್ ಇರೋದನ್ನು ₹6 ಪೇಯ್ಡ್ ಅಂತ ಮಾಡಿದ್ದಾರೆ. ಸೊ ಹಾಗಾಗಿ ₹10 ಕಂಪ್ಲೀಟ್ಲಿ ಶೇರ್ ಹೋಲ್ಡರ್ ಕಟ್ಟಿದ್ರು ₹6 ಕಟ್ಟಿರೋದು ಅನ್ನೋ ಥರ ಅವರು ಇವಾಗ ರೆಡ್ಯೂಸ್ ಮಾಡ್ತಾಯಿದ್ದಾರೆ. ಸೊ ಹಾಗಾಗಿ 6% ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ಆಫ್ 10 ಈಚ್ 6 ಪೇಯ್ಡ್ ಅಪ್ ಅನ್ನೋದನ್ನು ಈ 90,000 ಮಾತ್ರ ನೀವು ತೋರಿಸ್ಬೇಕು. ಉಳಿದ 60,000 ನೀವು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿ ಉಪಯೋಗಿಸಿ ಆಗೋಯಿತು. ಇದು ಹಳೆ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಲ್ಲಿದ್ದ ಅಮೌಂಟ್, ಇದು ಹೊಸ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಲ್ಲಿ ಬರುವಂತಹ ಅಮೌಂಟ್. ಸೊ 6% ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ಆಫ್ ₹10 each, ₹6 paid up, 90,000. Similarly, 4.5% preference shares of ₹10 each, ₹3 paid up, 39,000. So here you can see in the balance sheet you have shown both the varieties like this. So ನಿಮ್ಮ ಸೆಕೆಂಡ್ ಎಂಟ್ರಿ ಆ್ಯಂಡ್ ಥರ್ಡ್ ಎಂಟ್ರಿನಲ್ಲಿ ಇರುವಂತಹ ಅಮೌಂಟ್ಸು ಬಂದಿದೆ. ಯು ಕ್ಯಾನ್ ಸಿ ದ್ಯಾಟ್. ನೆಕ್ಸ್ಟ್ ಕ್ಯಾಪಿಟಲ್ ರಿಸರ್ವ್, ಲಾಸ್ಟ್ ಎಂಟ್ರಿನಲ್ಲಿ ಇದ್ದಂತಹ ಹಣ ಇಲ್ಲಿ ಕ್ಯಾಪಿಟಲ್ ರಿಸರ್ವ್ ಅಂತ ಏನು ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿದರೆ 8th ಎಂಟ್ರಿನಲ್ಲಿ ಟು ಕ್ಯಾಪಿಟಲ್ ರಿಸರ್ವ್ 16,750, ಅದನ್ನು ನೀವು ರಿಸರ್ವ್ಸ್ ಆ್ಯಂಡ್ ಸರ್ಪ್ಲಸ್ ಕೆಳಗಡೆ ತೋರಿಸ್ತೀರಾ. ನೆಕ್ಸ್ಟ್ 5% ಡಿಬೆಂಚರ್ಸ್ ಆ್ಯಂಡ್ 8% ಡಿಬೆಂಚರ್ಸಲ್ಲಿ ಯಾವುದೇ ರೀತಿಯ ವ್ಯತ್ಯಾಸ ಇರಲಿಲ್ಲ. ನಿಮ್ಮ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಲ್ಲಿರುವಂತಹ 5% ಡಿಬೆಂಚರ್ಸ್ ಆ್ಯಂಡ್ 8% ಡಿಬೆಂಚರ್ಸ್ಗೆ ಸಂಬಂಧಪಟ್ಟಂತಹ ಯಾವುದೇ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸ್ ಇರಲಿಲ್ಲ. ದೇರ್ ವರ್ ನೋ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸ್ ರಿಲೇಟಿಂಗ್ ಟು 5% ಡಿಬೆಂಚರ್ಸ್ ಆ್ಯಂಡ್ 8% ಡಿಬೆಂಚರ್ಸ್, ಆ್ಯಂಡ್ ದಟ್ಸ್ ವೈ ಯು ಆರ್ ಕಾಪಿಂಗ್ ಇಟ್ ಟು ದ reconstructed balance sheet as it is. No change. Creditors also there is no change, and you are copying it to the new balance sheet as it is because there is no adjustment relating to creditors. So you can see 5% debentures, 8% debentures and creditors. As it is transferred to the new balance sheet. Debenture interest due is foregone and that's why it doesn't come in the new balance sheet. ಈ ಡಿಬೆಂಚರ್ ಇಂಟ್ರೆಸ್ಟ್ ಡ್ಯೂ ಅನ್ನೋದು ಹೊಸ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಲ್ಲಿ ಬರ್ತಾ ಇಲ್ಲ, ಯಾಕಂದರೆ ಇದನ್ನು ಫೋರ್ಗೋ ಮಾಡಿ ನೀವು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿಬಿಟ್ಟಿದ್ದೀರಾ. ಅಂದರೆ ಡಿಬೆಂಚರ್ ಹೋಲ್ಡರ್ಸು ನಮಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಪೇ ಮಾಡೋದು ಬೇಡ ಅಂತ ಹೇಳಿರೋದ್ರಿಂದ ಇಟ್ ಇಸ್ ಫೋರ್ಗೋನ್ ಆ್ಯಂಡ್ ವಿ ಹ್ಯಾವ್ ಟ್ರಾನ್ಸ್ಫರ್ಡ್ ಇಟ್ ಟು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ ಆ್ಯಂಡ್ ವಿ ಹ್ಯಾವ್ ಆಲ್ಸೋ ಯುಟಿಲೈಸ್ಡ್ ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್. ಸೊ ದಿಸ್ ಅಮೌಂಟ್ ಡಸಂಟ್ ಕಮ್ ಇನ್ ದ ನ್ಯೂ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್. ಈ ಮೂರು ಅಮೌಂಟ್ಸು ಆ್ಯಸ್ ಇಟ್ ಇಸ್ ನೀವು ಹೊಸ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ಗೂ ಹಾಕ್ತೀರಾ, ಬಿಕಾಸ್ ಇದಕ್ಕೆ ಸಂಬಂಧಪಟ್ಟಂತಹ ಯಾವುದೇ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸು ಇರಲಿಲ್ಲ. 5% ಡಿಬೆಂಚರ್ಸ್, 8% ಡಿಬೆಂಚರ್ಸ್ ಆ್ಯಂಡ್ ಕ್ರೆಡಿಟರ್ಸ್. ಡಿಬೆಂಚರ್ ಇಂಟ್ರೆಸ್ಟ್ ಫೋರ್ಗೋನನ್ನು ನಾವು ಹೊಸ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಲ್ಲಿ ಬರೆಯಿಲ್ಲ, ಬಿಕಾಸ್ ಅದು ಫೋರ್ಗೋ ಆಗಿಬಿಟ್ಟಿದೆ. ಅಂದರೆ ಅವರು ಅದನ್ನು ನಮಗೆ ಪೇ ಮಾಡೋದು ಬೇಡ ಅಂತ ಹೇಳಿರೋದ್ರಿಂದ ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್ಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿ ಉಪಯೋಗಿಸ್ಬಿಟ್ಟಿದ್ದೇವೆ. ಸೊ ಬರೀ ಈ ಮೂರು ವೆರೈಟೀಸ್ ಆಫ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ಆ್ಯಂಡ್ 5% debentures, preference shares and equity shares and 5% debentures, 8% debentures and creditors na matra ನೀವು ಹೊಸ balance sheet ನಲ್ಲಿ ತೋರಿಸ್ತೀರ liability side. You can see the new balance sheet here. Equity shares, preference shares, two varieties, capital reserve, 5% debentures, 8% debentures and sundry creditors. I hope you have understood liability side. Asset side, as it is no change. You can see ಗುಡ್ವಿಲ್ ಆ್ಯಂಡ್ P&L ಅಕೌಂಟ್ನ ರೈಟ್ ಆಫ್ ಮಾಡಿಬಿಟ್ಟಿದ್ದೀವಿ. ಉಳಿದಿದ್ದು ಯಾವುದೇ ಅಸೆಟ್ನಲ್ಲೂ ಯಾವ ರೀತಿ ಚೇಂಜಸ್ಸು ಇಲ್ಲ. ಸೊ ಗುಡ್ವಿಲ್ P&L ಅಕೌಂಟ್ ಬಿಟ್ಟು ಉಳಿದಿದ್ದನ್ನೆಲ್ಲ ಆ್ಯಸ್ ಇಟ್ ಇಸ್ ಬರಿತಾ ಇದ್ದೀವಿ. ಓಕೆ, ಹಳೆ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಿಂದ ಹಾಗೆ ಕಾಪಿ ಮಾಡ್ತೀವಿ, ಇನ್ಕ್ಲೂಡಿಂಗ್ ಡೆಟರ್ಸ್ ಆ್ಯಂಡ್ ಕ್ಯಾಶ್. ಬರೀ ಬ್ಯಾಂಕ್ ಬ್ಯಾಲೆನ್ಸಲ್ಲಿ ಮಾತ್ರ ಚೇಂಜ್ ಆಗಿದೆ. ಯಾಕೆ ಚೇಂಜ್ ಆಗಿದೆ? ಹಳೆ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಲ್ಲಿ ಬ್ಯಾಂಕ್ ಬ್ಯಾಲೆನ್ಸ್ 18,000 ಇತ್ತು, 74,000 ರೂಪಾಯಿ ಡ್ಯಾಮೇಜ್ ರಿಕವರಿ ದುಡ್ಡು ಬಂತು ನಮಗೆ. ಸೊ ಯುವರ್ ಫಿಫ್ತ್ ಎಂಟ್ರಿ ವಾಸ್ bank account debtor to damage recovery account. So bank account debtor, so bank account balance has increased 74,000 rupees ದುಡ್ಡು ಬಂದಿರೋದಿದು. ಸೊ ಹಾಗಾಗಿ ಆ್ಯಡ್ ಮಾಡ್ತಾ ಇದ್ದೀವಿ. ಆ್ಯಂಡ್ ರಿಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಪೇಡ್ ಲಾಸ್ಟ್ ಬಟ್ ಒನ್ ಎಂಟ್ರಿ, ರಿಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಪೇಡಲ್ಲಿ 7,250 ಹೊರಗಡೆ ಹೋಗ್ತಾ ಇದೆ. ಯು ಆರ್ ಮೇಕಿಂಗ್ ದ ಪೇಮೆಂಟ್, ಅದಕ್ಕೆ ಸಬ್ಟ್ರಾಕ್ಟ್ ಮಾಡ್ತಿದ್ವಿ. ಸೊ 18,000 ಪ್ಲಸ್ 74,000 ಮೈನಸ್ 7,250, ಯುವರ್ ಬ್ಯಾಂಕ್ ಬ್ಯಾಲೆನ್ಸ್ ವಿಲ್ ಬಿ 84,750. ಇದೊಂದೇ ಚೇಂಜ್ ಇರೋದು ನಿಮಗೆ ಅಸೆಟ್ ಸೈಡಲ್ಲಿ. ಓಕೆ, ಆ್ಯಂಡ್ P&L ಅಕೌಂಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಬರೀತಲ್ಲ, ಗುಡ್ವಿಲ್ ಬರೀತಲ್ಲ, ಬಿಕಾಸ್ ಲಾಸ್ಟ್ ಎಂಟ್ರಿನಲ್ಲೇ ಅದನ್ನ ರೈಟ್ ಆಫ್ ಮಾಡಿಬಿಡ್ತೀವಿ. ಉಳಿದಿದ್ದು ಎಲ್ಲ ಅಮೌಂಟ್ಸು ಆ್ಯಸ್ ಇಟ್ ಇಸ್ ಓಲ್ಡ್ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ನಿಂದ ಕಾಪಿ ಮಾಡ್ತೀವಿ, ಬಿಕಾಸ್ ಇದು ಯಾವುದಕ್ಕೆ ಸಂಬಂಧಪಟ್ಟಂತಹ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸು ಇರಲಿಲ್ಲ ಕ್ವಶನಲ್ಲಿ. ಸೊ ಏನೂ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸ್ ಆಗಿಲ್ಲ ಇದಕ್ಕೆ. ಸೊ ಹಾಗಾಗಿ ಆ್ಯಸ್ ಇಟ್ ಇಸ್ ಅದನ್ನು ಹಳೆ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಿಂದ ಕಾಪಿ ಮಾಡ್ತೀವಿ. ಬ್ಯಾಂಕ್ ಬ್ಯಾಲೆನ್ಸ್ ಮಾತ್ರ ಚೇಂಜ್ ಮಾಡ್ತಾ ಇದ್ದೀವಿ, 84,750. ಯು ಕ್ಯಾನ್ ಸಿ ದ್ಯಾಟ್ ಓಲ್ಡ್ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್. Buildings 1,75,000, machinery 3,25,000, patents, furniture, investments, debtors, cash. As it is written. Only bank balance we have changed. P&L account goodwill ಹೊಸ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಲ್ಲಿ ಬರೆಯಲ್ಲ, ಯಾಕಂದರೆ ಅದನ್ನ ಲಾಸ್ಟ್ ಎಂಟ್ರಿನಲ್ಲಿ ರೈಟ್ ಆಫ್ ಮಾಡಿ ತೆಗೆದು ಹಾಕ್ಬಿಟ್ಟಿದ್ದೀವಿ. ಓಕೆ, ಸೊ your new balance sheet total will be 11,45,750. Total liabilities is also the same, 11,45,750, which has tallied. And I hope you have understood this problem. If you have any doubts, never hesitate to contact me for the doubts. You can drop a comment in the comment section below, or you can just message me on WhatsApp. Thank you so much.